what is long-term care insurance? And long-term care insurance has changed tremendously over the last 20 years. So I want to discuss that, but also how it works and if long-term care is appropriate for your clients. If so, and then why. So I'm sure everybody here has heard of long-term care insurance. Essentially, it's insurance that provides, that the meaning of it is to provide a dollar amount to help pay for supportive services. So if you need, we can talk about what it actually pays for, but essentially it's a policy that triggers on certain activities, and it will pay a certain dollar amount for a certain amount of time. And what it's meant to is help people live independently and have the means to live independently. So essentially what it is the long-term care insurance, as I mentioned, it's meant to pay for supportive services for somebody once they need care. And the question becomes, when does it start paying? And we'll talk about this in another slide, but essentially there are 6 activities of daily living, which we call ADLs. And if you actually cannot do 2 of those activities of daily living, then it triggers the benefit. And the activities of the ADLs are essentially eating, bathing, dressing, feeding, toileting, and ambulatory, meaning being able to walk, or cognitive impairment. So eating is essentially, as it sounds, is able to feed yourself. Bathing is it's like personal hygiene. It's not just being able to take a shower. It's also brush your hair and those kind of things, brush your teeth. And then there's dressing, be able to put on appropriate clothes. Feeding, which is obviously you're able to feed yourself. Toileting, which is essentially it's continence. It's not necessarily being able to go to the bathroom. It's being able to it's continence is actually one of the triggers as well. And then ambulatory, what I mentioned, is walking. Or the cognitive impairment, which is, of course, Alzheimer's, dementia, anything that unfortunately you cannot take care of yourself if you have that particular impairment. So just to kind of talk about how long-term care works. Essentially, when you see, and if I ever ran a quote for you, you would see that there's a benefit pool, which means there's amount of money that's essentially eligible to pay the benefit. There's a benefit period, which means obviously how long it's going to pay. So if you trigger the benefit, you can't do 2 of those ADLs, and you have a 5-year policy, then it will pay you that dollar amount for 5 years. Now, we'll talk a little bit about some of these hybrid policies, which allow a lifetime benefit. But right now in traditional long-term care insurance, without being a hybrid, the longest benefit period that you can find is 6 years. And then we talked about the ADLs and what those are. The elimination period is essentially, it's like disability insurance. Elimination period would be how long do you have to be eligible for the benefit before the benefit starts to pay. And typically, the average is 90 days, just like disability insurance. And then there's also the inflation rider. So like I mentioned, if you ever see a quote, an inflation rider is actually not as popular anymore because it's extraordinarily expensive. But you will sometimes see maybe a 3% simple or 3% compound. And that will actually make the policy a lot more expensive. But what it's meant to do is obviously hedge against inflation. So if you had a $100 a day benefit and then you add your 3% onto it, you bought it when you're 50 years old. By the time you need it and you're 80, then obviously that benefit has increased from 100 to whatever that number would be. And then there's shared care, which is actually like you think about life insurance on a survivorship where you have a husband and wife that are covered together. And that's what's called shared care. And sometimes that makes it a lot less expensive. So it's kind of like, okay, a question that I always get is, how long do you think that I would need this benefit? Or what's the chances of us having an incident where we actually need it? And this kind of goes over just the numbers as far as how long people need the coverage. And the average is about 4 years. So that 5 or 6 year policy period is sometimes very appropriate, but we'll talk about in a little bit is also the fact that you can need care at 30 years old and need it for the rest of your life. So trying to figure out that magic number is really, as far as how long you're going to need the benefit, is really based upon what you're comfortable with. Because obviously I would want a lifetime benefit, but others are very comfortable with a 5-year benefit. It just depends. So talk a little bit about, and I'm sure everybody's seen, we talk about inflation, but the incredible rise in the cost of care, and that it's become extraordinarily expensive because we have clients that want or need 24-hour care, and they need 24-hour care for several years. Well, imagine paying somebody to be at your home, and it has to be a licensed professional. Someone is in your home taking care of you for 24 hours a day. And you can only imagine how expensive that would be. So, and it's expected to obviously rise. The cost is expected to rise tremendously over the next 20 years. So keep that in mind when you're looking at a policy, because without that inflation, because it is so expensive, it's important, if you can afford it, is to buy the largest dollar amount now. If you're purchasing it now, the largest dollar amount you can afford, because in 20 years when you actually need it, or 30 years when you need it, that cost of care is going to be a lot more expensive, as I'm sure everybody can imagine. And then how does LTC work? So I mentioned that there's like a traditional long-term care, and that is truly a traditional long-term care, meaning I'm buying it just for long-term care. There's no other policy attached to it. Now, it's sometimes the least expensive, sometimes it's the most expensive. It is extremely hard to get traditional long-term care, meaning as far as qualifying for it, underwriting qualifies. So we'll talk a little bit about the underwriting requirements, but traditional long-term care is extremely hard to get. And that's why when people call us and they say, hey, we need long-term care, but this is the thing that's going on. Well, you can't buy insurance after you already need it, obviously. You can't buy car insurance after you've had an accident to cover that accident. So now it can be tax deductible. So if you have a C corporation, the premiums can be tax deductible. If you have an S corporation or an LLC, a portion of it can be deductible. But that's the what we'll take a look at when and if you ever wanted to look at a long-term care policy. Now, asset-based, a hybrid, is life insurance and long-term care. And don't confuse that with life insurance with a long-term care rider, which is the next one. But life insurance with long-term care is essentially, you're buying a life insurance policy. And what happens is, if, let's say you buy a $300,000 policy, what happens is that $300,000 is kind of a bucket for you. So you can, if you pass away before you use it, obviously your beneficiaries would receive the $300,000. Or if, let's just say you actually need the benefit and you needed, and this would be predetermined, I'm just going to use because my math is fabulous. If you need $100 a day, that $100 a day will eat into that $300,000 until there's no more policy. So it is possible that you buy that $300,000 policy and you've used all the $300,000 and then there's no more life insurance. But what we do is we put a rider on it, which means not only does it pay the life insurance, but it continues to pay past eating it into all that life insurance. So you would buy a rider that says, okay, in my $100 a day explanation, you buy that $100 a day, and then you have to use it for the next 20 years. Well, with that rider on it, it will actually continue to pay you or pay for your care for your lifetime. And this is really, these hybrids and the life with the long-term care rider, those are the only way that you can get a guaranteed premium, but to also get a lifetime benefit. Otherwise, you cannot. Now, the life insurance with LTC is essentially you're buying a life insurance policy, call it with Mass Mutual or Lincoln or whoever it is. Essentially, you buy a life insurance with a long-term care rider. And what it does is it pays, use that $300,000 example, what it does is it takes a percentage of whatever your death benefit is, and it pays it out in long-term care. Now, it doesn't eat into all the life insurance. So that's where that rider comes into play. Typically, with these type of policies, it's actually the long-term care portion is not forever, or what they consider for a lifetime. Typically, it's period certain, but it can be forever. It just depends on, obviously, it's a financial issue. But it's the long-term care rider on life insurance is typically meant for if your life insurance is the biggest need. So the traditional is, okay, your only long-term care. The hybrid is long-term care and life insurance. And then the second one is, or the third one, excuse me, is essentially you purchase it if really you want life insurance, but you're concerned about LTC as well. The other two are definitely a long-term care, not only purchase, but primarily long-term care purchase. So talking about underwriting, there are catch-all questions where you could, essentially it's a one pager and it has a whole bunch of questions on it as far as, what's going on with you medically. But if you have any of these conditions, then it's an automatic decline. And when I say that long-term care is hard to get, it's truly very hard to get. So if you have any type of conditions, it's better to kind of flip to the hybrid or the life insurance with LTC, because they're underwriting for life insurance. They're not necessarily underwriting for long-term care, because obviously you will pass away, but you not necessarily will you experience an LTC claim. But the thing is that on those LTC claims with the traditional long-term care, the benefits are, it's it's much harder to get than you buying it with life insurance. So this talks a little bit about kind of what is, obviously where you go from home care to assisted living to nursing home. And this talks a little bit about the cost associated with these. Now, sometimes you'll have a client that will say, or will say, I don't need it. I can afford to have, in-home care. I don't mind paying for it. It's just, I don't want to buy the life insurance. But it can be extraordinarily expensive. So most of the time it makes sense to actually buy a long-term care policy if you can afford it, and then just allow that to pay for the cost of care. Because quite frankly, it doesn't dig into your assets if you have that LTC coverage, or it doesn't dig into it as much. So these are just some of the carriers that we deal with. Obviously, some of these are life insurance hybrid companies. Others are just strictly long-term care. But there's still, and just to kind of touch on, the long-term care market itself has changed, like I mentioned, a lot in the last 20 years. It's become very, very expensive. It's become extremely hard to get, and the benefits have been minimized. So, for instance, I can tell you that Mass Mutual, which I never thought they would ever do, actually raised their prices. Mutual of Omaha raised their prices. So, and I mean, when I say raise their prices, I mean like by 40%. So when you're looking at long-term care, it's important to look at those hybrid policies as well, because they can't increase those premiums. And the problem with increasing these premiums is that obviously once you get older, you don't have the income that you had before. And all of a sudden your policy that was $500 a month is now $1,000 a month. So at the point where you can't afford it, you're being asked to pay more. So it's really important to keep that in mind. And the industry has definitely switched in that, you used to be able to get a lifetime benefit, used to be able to get $500 a day benefit, you used to be able to get the 5% compound, all that stuff. Most of that has gone away. So when people ask me if it's important or smart to look at it now, even people in their 50s, it absolutely is, because first of all, you're never going to be as young, as healthy as you are right now. And two, this is an ever-changing marketplace. And if you can, it's important to lock it in when you can. So keep that in mind. So obviously we talked about asset protection. It's a lot less expensive to pay for a policy than it is to pay for care. That's what insurance is for. And then obviously your standard of living, peace of mind. And it does help, because when we have a generation of people, of clients now that are having their parents are going through this, and it has become a big issue for them because they do see how expensive it is. And having that policy, it does provide a lot of peace of mind. And so I mentioned before, we talk about not needing it until you're older. Well, these are some examples of people that had life-changing issues that absolutely would qualify for long-term care. And that, Michael J. Fox is a great example in that he was diagnosed so young and he's still doing well at 61. So he would have been qualified for this policy from the point of diagnosis to current if he had had a lifetime policy. And we don't really think about it, but this is also mentions kind of brings home, and I hate to bring up all these names, and I'm sure everybody knows someone that's been diagnosed with MS or Parkinson's or Alzheimer's, even at a young age. So, I can't say strong enough how important it is to look when you're on a mid 40s and 50s. Even though you think it's too young, it's really not. And it's important, if you can, to lock in those premiums when you can. So this just gives you an idea of what happens, and all these people would have qualified for the policy, would have triggered those ADLs and would have been eligible. So we talked about the price of the increase. Now, what I did want to mention too is we've just gone through a round where there was this what's the word I'm looking for? Basically a law in Washington state that said, essentially, you have to have long-term care. And if you don't have long-term care, we're going to make you buy long-term care, or we're going to make you pay a certain premium, you as an employee or you as a person. Every person has to have long-term care. And it created a huge problem in the marketplace. Carriers dropped out of Washington like crazy. Now, there are about 10 states that are looking at doing the exact same thing. So if you do have, for instance, you have a client that has, 5 employees or 10 employees, or just you as an individual want it, that if you had it, you wouldn't have to pay those payroll taxes. You wouldn't have to pay for that. It would be the California CARES Act, essentially. And also to keep in mind is that you'll be ahead of the curve in that, because that Washington CARES Act passed. Now, there are, I think, maybe 2 carriers in the state of Washington that are only providing policies. So you can imagine what the premiums are and what the coverage is in Washington based upon the mass exodus of carriers. So now we have lots of options. Just keep that in mind. Because if it does come to fruition, it will destroy the California marketplace, or whatever state we're talking about. New York's another one that's looking at it. So does anybody have any questions?
Hey, Heather, it's Nick.
Hey, Nick.
Hello there. Thank you for the elevator music earlier. It was lovely.
Awesome.
So these hybrids, are those term life policies? Or are they universal? Are they either or?
They're never term. They're always some type of permanent. So it would be universal. It'll be an IUL or a whole life policy.
Okay. And they have like a residual value as time goes on?
Yes, okay. Absolutely. And it works just like a regular life insurance policy in that, because it is permanent, you do accrue cash value. You do, obviously have that life insurance benefit. And if you pass away, or if you want to get out of the policy, that's another thing, a beautiful thing about these hybrids is that just like your traditional life insurance, there's a bucket of money in there. And if you want to walk away, use an example, and you've got $10,000 in your policy and you decide, I don't want this anymore, you walk away and you cash it out and you've got $10,000. So there's a certain point, just like life insurance, where your premiums, and it's usually year 10, where your premiums actually equal your cash value. So you can walk away after year 10 and not lose a dime.
Yeah. Okay. And are those are becoming pretty popular, the hybrids?
Very popular, yes.
Okay. Well, because in fact, the fixed fee throughout the life of it.
Yeah. Exactly. Yes. Well, and the thing is with long-term care is that people look at it and, there's used to be something called return of premium. They don't have that anymore, where if you had the long-term care and you paid into it for X amount of years, you didn't want it anymore, there was that return of premium. Well, you can't get that anymore. The only way you can get that is with the life insurance, the hybrid plan.
Yeah. Okay. That makes sense to me. You're killing two birds with one stone, so that's good too.
Absolutely. Now, it does make getting the life insurance a little harder underwriting wise, because a little piece of it is that LTC. And like I mentioned, just getting straight LTC is very difficult, but getting the life LTC is just, it makes the life insurance underwriting. But you could always, if you go into underwriting, say, hey, I want life and LTC, but you're not approved for the LTC, then you can just pick up the life. That's it, guys. See, I did that pretty quick, 25 minutes. If anybody thinks of anything, if they have any questions, going forward, can't make this thing go forward. If you have any questions going forward, anybody come, you want a quote just to take a look at it. It's just like life insurance in that you don't have to pay anything to start. You go into underwriting. If you get approved, great. If you want to do it, great. If you don't, great. It's starting that process. So, and then let you know that we're going to be doing more lunch and learns. So I think our next one, I want to say, is life insurance, and we'll be doing that in a couple weeks. So if anybody thinks of anything, have any questions going forward, just let us know.
Great. Thanks, Heather.
Thank you, guys. I really appreciate your time, and I hope you had a great lunch.